Some investors have really hard time to decide whether they should go the passive way, meaning they should buy a passive income ETFs, or they should just buy a growth stock or ETF. And that's a conundrum that some investors are facing. But then here, if you watch this video today, I found a perfect fund. I'm presenting to you a perfect fund for you to invest if you're one of those person who wants to invest in growth, but at the same time you want to get a monthly distribution. So this is a Brompton Tech Leader Income ETF or TLF. This is Canadian hedged, and then if you look at TLF.U, this is a US hedged, right? We're going to look at a few things here. We're going to look at overview. We're going to look at portfolio composition. We're going to look at performance of the fund, which will, by the way, surprise you. And we're going to look at the distribution last, because we're investing for distribution and we're investing for performance. So those are the four things we're going to look. And the fifth, I'm going to show you a graph of growth from another source, is not this website from Brompton. So this is kind of third party for me to confirm. On this channel, I always talk about this type of fund. So if it's your first time, just make sure you subscribe. And if you like my content, just make sure you like. Let's start with the overview here. This ETF provide high monthly distribution and opportunity for capital gain through an investment in actively managed portfolio of large cap global technology companies selected by Brompton managers and write cover call program on it. Okay, our portfolio manager team first uses a top-down analysis to identify attractive subsectors. Rigorously fundamental analysis focus portfolio on the global technology companies which offer a combination of growth and value characteristics. The portfolio manager then actively set a level of covered call rating with a goal of optimizing distribution and return. So you might ask, why should I invest in this fund? Tech sector is profitable with a minimal debt and significant free cash flow. Underrepresented sector in the Canadian equity market. Global technology equity provide diversification benefits. And also invest this for a long-term trend as supportive of technology equity, if you believe in technology, of course. This ETF is a fit for investors who are seeking a stable monthly cash distribution, seeking opportunity for capital appreciation, and low overall volatility of a portfolio return that would otherwise be experienced by owning security of technology companies directly. If you own Tesla and Microsoft just directly, those stock will have more volatility, and because in order for you to avoid that, you don't want that volatility, then you can just buy this ETF which doesn't have as much volatility as those stocks. And of course, for investors who can handle ups and downs of the stock market, because any person who invests, you have to be able to stomach the ups and downs. That's just normal for any type of investment. Now we look at fund fact. So the ticker symbol is TLF. If you want to invest with using Canadian dollars, then you use this ticker symbol TLF.TO. Or if you want to invest using Canadian US dollars, then you buy TLF.U. That's a difference between TLF and TLF.U. Inception date. This fund was incepted in May 20th, 2011. So it's been around more than 10 years. And that's why we have performance, which is great. Management fees is 0.75. So it's a little bit higher. Of course, it's active and it has a good return. Custodian is CIBC Mellon Trust Company. Rating, of course, is medium to high, because it's a growth stock. They're usually medium to high. Manager of portfolio, of course, is Brompton Fund Limited, and transfer agent is TSX Trust Company. Eligible for this fund is eligible for all registered and non-registered accounts, so you can invest in any type of account you would have. Now let's look at portfolio composition. So we have two things here. We have geographic location and we have asset allocation. So when you look at the geographic location, we have 91.9% of this fund is invested in the United States, because most of it they are Nasdaq stocks. So and then the 3.7 about Ireland, 3.5 is Netherlands, and we have 3% cash and minus 0.1, that's other assets. We look at the allocation. We have 7.3 information technology. We have 11.2. This is a communication. We have 4.5, that's consumer discretionary. We have 3.4 industrial. We have 3% cash. We have financial, which is 2.6, and other assets. Now we look at holdings of this ETF, what stocks they invest in. They invest in Apple, Alphabet, ServiceNow, Meta Platform, Microsoft, Amazon, Oracle, Adobe, Nvidia, Applied Material, Synopsys, Motorola Solution, Accenture, Broadcom, Salesforce, SM Holdings, Automatic Data Processing, Cadence Design System. They have Cash, which is 3%. They have Gartner's, Palo Alto Networks, Cisco System, Advanced Micro Devices, which is AMD, and Amphenon Corp, MasterCard. Those are the stock they invest, and we can see the biggest holdings are Apple, Alphabet. Now let's look at performance. This is the graph of 10. So you invested $10,000. That was during inception on 2011. So annual compound return, Brompton Tech Leader Income ETF, Canadian hedge, and this is a US one. So let's focus on Canada or US. Either way you will invest. But we look at the total annual this year to date return is 36%. We look at the 10-year has returned about 15.7 annual return. So that's a pretty good. We look at the US, of course. If you invest in US dollar, it will be the same, but of course there's a difference a little bit, even though it's the same funds, but the difference is, of course, is because of the difference fluctuation of the currency itself. So that's not a big deal. Now let's look at year by year return. If we look at the year return, this is from 2012 to 2022. That's 10 years, because within those 10 years, each year has returned differently. For example, 2012 has returned only 4%, 13, 31%, 14, 15%. 2015 it was down 13%, 2016 was 8%, 2017 34, 2018 4, 2019 was 37, 2020 was 38, 2021 was 30, 2022 when the market crashed, it returned about 29%, which is actually did better than the Nasdaq went all the way almost to 35, I believe. But when you look at all those return, what means is within these 10 years, if we look at combination of all those years, on aggregate has returned about 15%. So that's a pretty good. One thing I really like about this fund is that they actually pay monthly distribution. Not only they pay monthly distribution, but also they have a tendency of increasing their dividend. So let's look at example here. Let's select year. So let's start with, let's say just 2 years ago, 2020. Look how much they paid 2020. So January 31st, 2020, they pay only 54. The whole year they pay the same, right? But let's look at 2021. You see the dividend has increased. Instead of 0.54, now it's 66. So it has increased massively. So that's a pretty good. And we look at the 2022. Look at that. It has increased from 6 to now is 83 cents. And then in June they increase from so the last time we paid in June, from July they increased to 9.58, July of 2022, and that's the rate that they're paying right now. If we look at the 2023, it's 9.58. So with this it seemed that they're going to increase their dividend every time, which is a pretty good. So talking of return, I just went to this website to confirm the return, how much you would get. So had you invest $10,000 10 years ago, so look at that. If you invest $10,000 10 years ago, your money would have been almost 50,000. So I mean that's 5x, and return would be 15.71. So this is a pretty good, because even S&P 500 does not give you 15%. It's only give about 11%. So you're getting more than S&P 500. So you're beating the market with this fund. It's a pretty good record within 10 years. And that's what I like about this, because there's a record of 10 years. Other funds, it's very sophisticated to have 10 plus year of data, which we have. The last thing I want to show you is the on this chart today. This is Yahoo Finance Brompton Tech Leader Income ETF. TLF price is about 19.18, as of course crashed about 2%, same as the market today. Everything was red today. We'll look at the 52-week range was between 14 to 2071, and of course the year to date return is about 32, and they pay 5.66, so round up to 6%. And this is a graph. We look at how much the graph, it looks really nice and healthy. We look at the max, see how it went up nicely. And of course in 2022 last year in September, that was the lowest point, was about $14, but then it seemed to be going up right now, so it's pretty good. And then there's a little dip right there, just this correction that's happening right now. So it's going literally pretty much with the index, but has returned more than the S&P 500. So that's a pretty good news. So anyways, if you like this video, or if you want to watch more video like this, just make sure you subscribe and follow. So hit the bell button, and also if you like my content, to just make sure you give me a thumb up, you like. And thank you very much for watching. Till we meet again on next video. Bye bye.